Session will be studying law of demand, law of supply, equilibrium, and basically various objective questions based on that. So let's start. Always we start with the lecture with a motivation, so or positive note. So the today's motivational quote is: great achievement is rising after every fall. Means in life it will never happen that you will never fail, but rising after every fall will give you great achievement. Okay. Download Adda 24/7 app on your mobile. Then this app will give you the latest updates of various banking as well as other government exams, study materials, video lectures, live classes. Okay. Also follow our officers Adda 24/7 YouTube channel. There also you'll get all the updates. Okay, and various live sessions also. So go for that. Share on the social media. Tell your friends also. We are starting a new batch of CAIIB targeting June 22 batch, 22 exam. The batch will start on March 28th. Timing is 6 a.m. to 8 a.m. We will be covering BFM, ABM and retail. All the objective questions, case studies, plus all the numericals. Means basically you don't need to read any other book once you follow these lectures. Okay. So definitely join. The batch is totally in English. Okay. Also, we are going on with the new batch of JAIIB. It's already started March 7th from 6 a.m. to 10:30 p.m. So May 22, the target exam date is May 22. It will also contain all the three subjects: LRB, legal, accounts and PPB. Okay. Tell your friends who are appearing for JAIIB. Okay. So if you use this code Y432, you will get, for today's offer only, you will get 80% off. Okay. 80% off. This is specially for the Women's Day. And on other days if you get, you will get 77% off roughly. Okay. So definitely try to avail this 3% extra discount for today. Join today as fast as possible. Share it with your friends. Tell all your friends on the social media. Okay. Share this as much as possible. So let's start with the topic. Today's topic is demand and supply. Basically we will be studying law of demand, law of supply, then equilibrium and objective questions. Okay. Law of demand means law of downward sloping demand. Okay. Here in the heading itself we have given downward sloping. So what does it mean? Demand curve is always downward sloping. Okay. Means what do you mean by that? When the price of the commodity is raised and other things being constant, means other than price all the remaining factors are constant. Means government these schemes, or government's way of thinking, or government policies and other inflation, all these remaining things remain constant. Then when the price of the commodity is raised, buyers tend to buy less of the commodity. Okay. What does it mean? See here, the price over here was, let's say, P. Okay. And the quantity purchase was Q, let's say Q2 and P2. Okay, this was the first price earlier. Now if I rise the price, okay, means if I raise the price to from P1 to P2, what will happen? If I raise it to P1, the quantity demanded will shift from Q2 to Q1. So P2 to P1, okay, means price is risen from P2 to P1. So this quantity demanded will reduce from Q2 to Q1. Now similarly, if I increase the lower the price from P2 to P3, so the quantity demanded will rise from Q2 to Q3. So what do we see from this graph? If the price is increased, quantity demanded decreases. If the price is decreased, the quantity demanded increases. Right? Demanded. See here, there are two things over here: demand and supply. Demand always comes from the consumer side. Supply always comes from the seller side. Okay. So definitely everyone will try to consume less of the things if the price is raised. Okay. So when the price is lowered, other things being constant, quantity demanded increases. It's just the reverse of that. You can also write here vice versa. It means the same thing. Okay. So see this. demand curve is always plotted on x and y axis as quantity demanded on x axis and price on y axis. Okay, so what do you understand from this? Important part is demand curve slopes downward. This was a question in every exam and basically last exam also. Okay, last exam means just now which has finished. Okay, law of upward sloping supply curve. Now this is totally opposite to demand curve. What happens in demand curve? It slopes downward. So supply curve will slope upwards. The law of supply is the microeconomic law that states that all factors being equal, as the price of the goods or services increases. Now understand this. As the price of goods or services increases, the quantity of goods or services that the supplier offers will increase, and vice versa. Now here the question is of supplier. Earlier the question was of demand from the consumer side. Okay, now I'll ask you one question. If you have to sell something today at, let's say, 10 rupees, and you will be selling some 100 goods for 10 rupees, so how much will you earn? 100 into 10, 1000. Now if I tell you this price of this quantity is going to increase to 20 rupees in next 1 month, so what will you do? Will you sell it now or will you sell it after 1 month? You will definitely try to sell it after 1 month because you want more price. Also, what will you do? If you are selling 100 goods for 10 rupees, within 1 month you will produce more 100 goods and try to sell 200 goods after 1 month. Why? Because you are getting higher amount. So the logic is the supplier or the seller will always try to sell higher number of products, higher quantity of products if the prices increase. Okay, so we can see this from the supply curve. See this, on y-axis it's price, on x-axis it's quantity supplied. Now let's say the price was P2 over here and at that time the corresponding quantity was Q2. Now if the price increases from P2 to P1, the supplier will try to increase his quantity from Q2 to Q1, right? So here the curve is going upward. Similarly vice versa. If the price goes down from P2 to P3, the supplier will try to reduce his quantity from Q2 to Q3. Why? Because he is getting lesser profit. That's basically the meaning of upward sloping supply curve. Okay. Nowadays there are certain exceptions to this. Means what? Now with the internet age, see here, thumb rule remains the same. Always any supplier will try to sell the goods at a higher price. But what happens nowadays with the competition in, that's why it said other factors being equal. Nowadays the other factors are never equal. Things have changed drastically. What happens? Even if you try to maintain this law of supply, but what happens? The competition comes in. And due to that competition, what you have to focus on, because right now nowadays the focus is on the revenue model. In revenue model, what do? It works totally opposite. If the price reduces from P2 to P3, the supplier tries to increase his quantity from Q2 to Q1, or some Q3 will come over here at that time, so that his revenue remains the same. Means earlier he was selling 100 goods at price P2. Now if the price falls from to P3, then he'll try to sell 200 goods. Means let's say if the price was 10 rupees or 20 rupees earlier and he was selling 100 goods, so he earned how much? 1000. Now the price has fallen from 20 to 10. So to maintain the revenue of 1000, how many goods will he'll have to sell? From 100 goods, now it will be increased to what? Let's say 15 or something, any number. But it will definitely be more than 100. Okay, so he has to maintain the same revenue. So that is an exception to this, but exception means other factors being equal, because the models are shifting from this price model to revenue model. That's why these exceptions have come in today's internet age. This also you need to know. Means sometimes it is asked what are the exceptions or what are the negatives of this supply curve. Okay. Now we'll come to demand and supply schedule. Now I'll call it in short form DS schedule. Okay, DS, because always demand supply, it's DS. It is a numerical tabulation showing the quantity that is demanded or supplied at a selected price. Means what quantity is demanded or supplied at a selected price. A demand supply schedule can be of two types: individual demand supply schedule or market demand supply schedule. Means demand supply schedule is basically what? It's a table showing how many goods have been demanded or supplied at X price. Then how many goods have been demanded or supplied at Y price, Z price, something like this. Okay. Then the DS schedule or demand supply schedule is of two types. Individual means for individual firms. See this table will make the things clear. Price is 100, then A firm sells one good, B firm sells two goods, like this. Similarly, price is 20, then A sells 10, B sells 10, C sells 5, D sells 10. So this is the schedule. Now you can consider the schedule for demand, or you can consider this schedule for supply, as the question you get. Okay, both the things in demand and supply, both ways the schedule remains the same. Now what is individual schedule? See, this schedule is of A, so this is an individual schedule. This schedule is of B, it's an individual schedule. This is C, individual schedule. D, individual schedule. Now you got this individual schedule, but what is market schedule then? It's just the total of all these A, B, C, D. Let's say in the market there are only 4 players. So the market schedule is the total of all these. So 1 plus 2 plus 1 plus 2, 6. See this, market schedule is 6. Similarly, if you add all these, you'll get this schedule. So what do we infer from this? Individual schedule is for each separate company. It gives the quantity supplied or demanded at specific prices. Market supply demand schedule means what? It's the total of all the players, okay, at the specific prices. Okay. Now equilibrium. What is equilibrium? Equilibrium is where this is law of demand and this is law of supply. Where they meet, this is known as equilibrium. So the price at which the quantity demanded of a commodity equals the quantity supply is known as the equilibrium price. So where the quantity demanded and supplied equals, or means basically equals, at that price is known as equilibrium price. Means what? There the business will happen. At any other price, business won't happen. Okay. Why? Let's see this example. At point A, okay, what is the price P1? What is the quantity demanded? This is the law of demand, okay, or demand curve. So quantity demanded is A. What is the law? Demand quantity supplied B. Means market is demanding 100 goods and supplier is ready to sell 200 goods. So this 100 goods is an excess supply, 200 minus 100. Similarly, the reverse way over here. At price P2, the quantity supplied is 100 and quantity demanded is 200. So this difference is the excess demand. Okay. Here businesses won't happen at all, because in case of excess supply or excess demand, there is no business. Business happens when demand and supply meet each other. Okay. So this is known as a equilibrium price, or this is also known as a market clearing price, market clearance price. Okay. So it is always plotted on price versus quantity demanded. Now let's go to the objective questions. Demand schedule is basically let's see the choices. I'll give you 5 seconds after each question. The choices are relationship between demand and quantity bought. See a demand schedule. Relationship between quantity and between price and quantity bought. Relationship between price and demand, and none of these. I'll give you 5 seconds. Answer this. Demand schedule. Just now we saw it, right? Okay. Shall I give you the answer? So the answer is 2. Relationship between price and quantity bought. Okay. So demand schedule is always what is actually bought. So as the price increases, the quantity will decrease. Got it? Second. Yeah. Market demand curve obeys the, now demand curve, what does the market demand curve obey? Let's see the choices. Law of demand sloping or sloping demand basically. Law of upward sloping demand, okay. Law of diminishing returns, and none of the above. Okay, law of downward sloping demand. So market demand curve always obeys what? Okay, again I'll give you 5 seconds. Try to answer. 1, 2, 3 or 4, none of these. So the answer is 1. Law of downward sloping demand. So demand curve always slopes downwards. Supply curve always slopes upwards. So it's the word over here should have been supply. So market demand curve, it will always follow demand curve only, up or downward sloping demand. Okay. Forces behind the demand curve are, means why the demand curve changes, means why the quantity supplied, quantity demanded changes with the price. So the choices are expectation about the future economic conditions, average income, cost of production, and both 1 and 2. So which of them do affect the demand curve? Demand curve, okay. So let's give you 5 seconds again. So the answer is, got the answer? So I'll give you the answer. The answer is 4th, both 1 and 2. Because demand curve we are talking of. What has the demand curve to do with cost of production? This cost of production will affect supply curve. It won't affect demand curve. Okay. So 3 is out. Expectation about future economic conditions. That is correct, because that will affect the demand curve. If I expect the prices of the goods to come down, so shall I buy something now? No. Average income, that is also one factor. If the average income of any city increases, then the demand for the goods will also increase, right? And this leads to what? Inflation. Always remember that. Okay. A downward sloping demand curve relates quantity demanded to. Okay. So this is basically means the graph of demand curve is plot against to which. So on x-axis it is quantity demanded, and y-axis it is supply, income, price, demand. Okay. Again 5 seconds. Try to give the answer. So the answer is y-axis is price. Okay. Answer is 3. Last one. Shift in supply means why does the supply curve shifts? The choices are when the changes in the factors other than the goods own price affect the quantity supplied. Okay. Means factors other than the price. So supply curve changes because of the other factors being constant, what we call those factors change. Number 1. Number 2, when the changes in the goods own price affect the quantity supplied, means the price of the goods also changes. And third is both 1 and 2 and none of these. So always remember supply curve will change because of, definitely it's because of 2, surely. But what about 1? Think. I'll give you 5 seconds. Either the answer is 2 or answer is 3. Now check. Okay, tick 1, 2, 3, 4, 5. Got the answer? I'll give you. Answer is 1. When the changes in the factors other than the goods own price affect the quantity supplied. That's what the suspense I kept it. So the question is, when the changes supply curve shift in supply curve always shifts because of the quantities demanded or quantities supplied for due to the factors other than the price. Always remember this. This was the only reason why I kept the suspense. Both 2 and 3 are not the answer. Specifically I mentioned 2 and 3 so that you get confused. In exam also you will get the same logic, same things, same thoughts in exams. Okay. So the answer is 1. Always remember supply curve means due to other factors. That's important. Okay. Shift in supply curve basically, not supply curve. Shift in supply curve means changes in factors other than the price. Okay. So that was the point of today's lecture. I hope so you might have enjoyed it and learned something new. Okay, these questions do come to you in the exam. Also, I would suggest I would follow our regular batches which are coming up from March 28th from 6 a.m. to 8 a.m. See, the timings are also matched so that your bank timings don't get hampered. We are targeting the June 22 exam, BFM, ABM, and retail. All the three subjects, the numericals, case studies, theory, everything will be taken care of. You don't need to read any other book. And importantly, remember the fees is brought down drastically. Means discounts are offered drastically to you. Okay. Also follow this. Tell your friends about this JAIIB batch also. Legal accounts and PPB targeting May 22, starting March 7th. It's already started. Okay. So both of them have this 80% off for today. Use this code Y432. Okay. Use it, tell your friends, share it on your social media. Again, I would suggest if you are not buying today, you are losing this 80% off scheme. Okay. Then you'll get the 77% off scheme. Okay. So follow this as much as possible, being the Women's Day. So I'll take the leave now. See you in the live classes. Okay. So I'll stop over here. Bye.